What a week we are having, ladies and gentlemen, Allincrypto here, and welcome back, guys, for what is going to be nothing short of another jam-packed daily market update. We've got a hell of a lot to get into. We're going to start things off with a forecast from JPMorgan that now have a 60% probability on a recession taking place this year. We'll put some context to JPMorgan's predictions by looking at the kind of predictions we saw from all the major financial institutions around the world at the start of this year. And now they have changed drastically on the back end, of course, of everything that Trump has announced. There's two routes ahead. For me, one is that tariffs are literal and they get implemented in the manner that they are. And in actual fact, there may even be some escalation like what we're seeing out of China in response to these, which I don't think is the right approach. You know, you're kind of shooting more holes in the boat, if you will, as Milton Friedman would have said in relation to tariffs. And one is that escalation scenario. That's ultimately going to affect costs, which is going to affect revenue, which is going to, of course, affect the stock market, which is a representation of these companies and how well they're doing. Theoretically, anyway, I think it has a lot more to do with the monetary supply and investments acting as a vehicle or a hedge against that. Anyway, so there's that path, or there's the path that tariffs open a dialogue, which I was more in favour of, where you actually may see lower tariffs across the board and incentivization to move onshore and go to America. We're going to talk about that. So Scott Bessent, he's an ex-Soros guy. You know, he was called a gold bug at one point, and we'll look at a clip of him kind of saying that himself when he was at his firm. But Scott Bessent recently did a Tucker Carlson interview, and it was well worth a watch, certainly in regards to everything taking place right now, because it gives you an insight to what their regime and mindset is. And we're going to play a couple of clips of that, but the markets have got to digest all of this, and that's resulted in my career this week being probably one of the worst weeks I've seen for the S&P 500. Obviously, there's been worse weeks, like with the lockdowns and things like this that we've lived through. But it was a pretty brutal week. And as far as the stock market's concerned, it's really a kind of Mag 7 company. And despite the S&P 500 closing down 5.9% yesterday, Bitcoin really didn't move. And actually the cryptocurrency space, the altcoin sector largely finished green. And you'd expect on a day like that for crypto to plummet into oblivion. However, it didn't. And you've got to ask and try and answer the question, well, why is that? Is it because crypto is more of a kind of global, not entirely tethered to the United States like these companies are, vehicle of investment that has more of a global impact? And actually, you know, this is kind of what BlackRock have been talking about, that Bitcoin can kind of be a hedge against governments. And thus cryptos more broadly as kind of operating systems around this. Or is it just because there's a lack of volume and there was a lot more going on elsewhere, so people didn't really have the time for the crypto space? We'll try and ask and answer some of these questions in this video. So we've got a lot to get into. We're going to start things off with JPMorgan and their forecast. Then we'll look at some clips from Scott Bessent and his Tucker Carlson interview. Trump tweeted, or Truth Social, I'm not sure what we're saying here, towards Jerome Powell, talking about interest rates. We're seeing the 10 years, you know, really fall in that manner that we were predicting. Oil coming down in the manner that, you know, one of the only trades we have on is oil and a commodity trade against the Korean won. But so is the dollar, and risk assets obviously also coming down because of everything taking place. Then we've got some interesting news from the SEC in regards to stablecoins. Stablecoins are the evolution of money. The cryptos that enable that are going to be very valuable, in my opinion. And then we'll finish things off with a market take. Look at how crypto's doing. Look at how the stock market closed up. I'm trying to put everything into perspective, and hopefully that's what this daily market update can do. On the back end of JPMorgan's new prediction for recession. So JPMorgan raises risk of recession to 60% as Trump's tariff turmoil upends markets worldwide. Just to give a bit of context to how well these guys are at being predictors, you know, this is essentially the S&P 500 targets at the start of the year. You know, you had some all the way up at 7,100. We'll put the S&P up as we're talking about it in context. This is now well and truly outside the realms of normalcy. Again, top 5 in terms of downside for me as far as the S&P is concerned. But you can see these guys were all projecting it to be up here this year, and the opposite is taking place, including actually JPMorgan, that at the start of the year through Dobrovgo was predicting 6,500, which would have sort of took you up here, which we do actually have a target for, a technical target for. It's interesting the S&P sold off after making that inverse head and shoulders target that we have, often a good time for something to sell off. The question is does this continue? And there is a little bit of danger in regards to it potentially doing that. What you need to see in the coming weeks and months is a real recovery for the S&P. not a weak bounce that then leads to further contagion. I suppose one of the interesting things in regards to yesterday was just how well Bitcoin held up. You know, to chuck on the S&P, it kind of puts things in context. You know, these are correlated, of course, but, you know, look at the sell-off that the S&P had compared to Bitcoin. Why is that? And we've given perhaps a little bit of explanation for that. What I want to do, and I think what the markets and everybody's trying to digest, is this new regime and what it means. And is it going to be successful? Is it not? One of, I think, the reasons, and perhaps in this shows a lack of consideration towards the stock market, certainly the Mag 7 companies, is what Bessent had to say yesterday on Tucker Carlson's show. So let's go ahead and play that. Then he also gives a kind of clip on gold and even mentions Bitcoin, and then we'll get into the other news that we have for you. You know, we want to try and keep people as updated as possible during this time period. There's some things we don't have the answers for, such as why did crypto not sell off significantly yesterday when the S&P 500 was 5% down? You'd expect Bitcoin to be 10, 12% down on a day like that. It did nothing. Is that a full sense of security? Is that to come? We'll try and ask and answer these questions. Let's play this clip of Tucker Carlson and Bessent.
The top 10% of households. And look, I'm not happy with what's going on in the market today, but the distribution of equities across households, the top 10% of Americans own 88% of equities, 88% of the stock market. The next 40% owns 12% of the stock market. The bottom 50 has debt. They have credit card bills, they rent their homes, they have auto loans, and we've got to give them some relief. That I was struck by the statistic from last year.
That's the message right there. Just as a bystander, I'm like, wow, okay.
All right, or that I like the examples, and I was really struck by two different statistics last year. Summer of 2024, Americans took more European vacations than they had in history. Summer of 2024, more Americans were using food banks than they ever have in history. I went into two food banks near my hometown to ask, what's the story? And they said, you know, it really takes, for a lot of people, it's a loss of dignity to walk in a food bank.
Of course.
But they were seeing a new phenomenon, that it wasn't their traditional clientele. It wasn't people who lost their homes. It wasn't people out on the street. These were working families who could no longer, $100 at the grocery store, that basket of groceries every week, they were missing 5, 6, 7 things, and they were coming to the food bank to top up. So that's not a great America. Record European vacation, record food banks. And no reason we can't keep the record European vacations going, but we got to take care of these other people. And you know what? That they don't want handouts. The Democrats had this strategy called compensate the loser. So first of all, the name of that strategy, I don't think the bottom 50% of Americans are losers. I think the system hasn't worked for them. I think that they are winners. It's just a bad system. So we are going to fix the system. And look, they want good jobs. They want their kids to do better than they do. They want to own a home. They want to pay down their debt. That this isn't hard. And I think that we can do this in the next 4 years.
And what that means for us as investors is the question to be asked and tried to be answered. And I think I don't really have all the answers towards that right now. There's a major sort of shake-up. And really what he's talking about is wealth distribution. And potentially what I got from that was looking at that top 10% of Americans that own everything and trying to switch that narrative up. Now, does that come from taking from them to give to the latter or the former? Or does that come from boosting up the 50% so that it closes that gap? These are all questions that are going to be asked and answered. And I don't have all the answers. I was going to play a clip of him talking about gold and Bitcoin, but we won't for this. Obviously, on the back end of the price action that we've seen predominantly for the stock market, this was a tweet from Trump. This would be a perfect time, or Truth Social, I should say, for Fed Chair Jerome Powell to cut interest rates. He is always late, but he could now change his image and quickly. Energy prices are down, oil really coming down, which is interesting. Interest rates are down, inflation is down, even eggs are down 69%, and jobs are up. all within 2 months, a big win for America. Cut interest rates, Jerome Powell, and stop playing politics. So one thing that we usually see on the back end of market movements like this is reactions from the Federal Reserve. The question is, are we going to see it this time? And I think one comment that I keep coming back to was one that Trump made to Jerome Powell going into the election. And he said, don't you dare lower interest rates before I win or before I'm in office. And why would he have said that? Well, because it's a tool that can be used to stimulate economic growth that they still have within their arsenal. So I think one of the best ways to approach what's taking place right now is to see how things shape up. There's a lot that needs to be watched for me, for example, the S&P and what it now does in regards to post all of this is going to be significant. We've had substantial downside, a very negative week. We're likely going to get a bounce. Is it going to be momentous? What are we going to start to see in regards to progression on the trade tariffs? What are we going to see in regards to economic policy? Jerome Powell spoke yesterday, still very much putting out a very, we'll just wait and see, and potentially risk being late on things narrative, which the markets aren't liking. There's so much to watch. For anybody to say that they have absolutely the answers, you know, I believe I'm pretty good at what we do in regards to being able to forecast markets. The one market, unfortunately, that's been a bit of a pain, but we're generally up on is the altcoin sector. For anybody that's trying to forecast markets and try and give a picture to everything, it's not as clear cut. And again, I wanted to play that clip of Bessent because it shows a real shake-up and a change. Let's talk about some positive news as it relates to the cryptocurrency space. The SEC classifies stablecoins as not non-securities and faces criticism. Really, more importantly for me was David Sachs's comment on this. The SEC has determined that fully reserved liquid dollar-backed stablecoins are not securities. Therefore, blockchain transactions to mint or redeem them do not need to be registered under the SEC and Securities Acts. Helpful clarity. Stablecoins, ladies and gentlemen, are the future of money. I am 100% convinced on that. And the cryptos that enable that are going to be worth a hell of a lot of money. They're not just the future of money, they're the future of the financial system. We'll do a longer video on that and talking about investing actually into that trend. When it comes to Bitcoin, just to take the S&P off here, I'm kind of remarkably surprised with how well it did yesterday. You would have expected it to really plummet significantly. Could be due to, like I say, a lack of volume. Could still be to come. Could be actually because crypto is more of a global vehicle. And really, if you look at the S&P 500, it's suffering from those Mag 7 stocks that I kind of looked at. Some of these trends are still intact, but there's danger in regards to this. You likely get a bounce across the board here. Question we've got to try and ask and answer is, does this lead to contagion? And how does crypto fare in that? And I think, like I say, you guys can see from this update just how much is going up. Tesla really suffering from multiple things, I think. Tesla suffering more so than others from the kind of political role that Elon's playing. You know, you look at this, it was the Mag 7 companies that really dragged everything down. Although saying that, the IWM and indexes more broadly didn't do too well at all. IWM's been perfect for us up until recently. And this is now, you know, sort of failing support. So there's a lot to be watched on the stock market. The crypto space still doing well, still intact. There's a number of things that lead us to be bullish on the crypto space. But if the stock market's going to sell off, you know, one has to ask and wonder, how does crypto fare in all of that? And I certainly don't have all the answers. This is Bitcoin against the SPY, which is in an uptrend. Now, you'd expect Bitcoin to be in an uptrend against the SPY when both are doing well, because typically the correlation has been when one isn't, the other isn't, due to them both being affected by global liquidity. But what we're seeing is, I mean, this is a great chart. You know, this just retested all-time highs and is continuing. And I've got higher targets that we've had for a long time on the S&P or Bitcoin versus this SPY. Ladies and gentlemen, that is really it from me. A lot of questions we don't have, or a lot of, questions that we don't have the answers for right now. I'm still eternally optimistic because I understand what the cryptocurrency space is and the evolution that it is going to bring to the world and the volume of money it's going to attract on the back end of all of that. Right now, for me, main focus is what's the stock market going to do from here on out? And trying to understand, could crypto survive that? On balance probabilities, you know, we know the correlation is very stark there and it probably wouldn't, but there is some interesting charts that potentially point to otherwise. So that's it from me. A lot to digest, as I'm sure you can imagine. There's lots of things going on. We'll try and help you through it all. Don't forget to become a subscriber, and I'll see you all in the next one. Thanks for watching, guys. See you soon.